Joining us now, Udayan Goyal, co-founder and managing partner over at Apis Partners, joins us around the table. Pleasure to have you. Thank you so much for joining us. We've spent about 90 minutes of the show talking about the volatility in these markets, when we're going to see the public markets start to crack. We know we're coming off of a banner couple of years for the private markets as well. How do you digest that? How do you marry the success of private markets in the last couple of years with the volatility we're seeing in the public ones now?
Well, you know, volatility generally creates both issues and opportunities, right? I think the opportunity that volatility has created, particularly for deploying money from the private markets, what we call the dry powder, into the markets has been actually quite interesting, because it creates situations where you can either find interesting asset sales or stress situations or carve-outs where you can actually take interesting assets out during these markets. So at one level, the vol creates an issue. Obviously, we've come off a pretty tough rates environment. So last 3.5 years, you know, hangover from COVID, tough rate environment. That's made it quite hard for private equity exits over the last few years. We're almost at an all-time low in terms of what we call DPI, which is the exits, which then translates into money back to the limited partners who are the investors for the private equity community. And so now we're coming out of that a little bit as the rate environment improves. And obviously that creates opportunities now to exit and start to improve where we are.
Well, Udayan, the most common exit is a private company grows with some private funding and ultimately makes it out to the IPO. We're in an environment where capital markets aren't yielding that much success in terms of that path. What are the other options when it comes to deal exits?
Yeah, so 100%. The IPO market's been closed. It's been closed for the last 3 or 4 years. We're starting to see a little shimmer of light right now in the IPO market, but it's literally the beginning. We as a firm, we generally prefer not to do IPOs. We've, I think, done one IPO in our history, and then there's one coming up. Those tend to be in very specific markets where the IPO market tends to be very resilient and largely in India. But the rest of the world, Europe, other places, pretty hard to do IPOs. So we really focus on strategic exits. So our focus is to go after those companies that are looking to fill a particular gap in their offering, where we've built a company that actually fills that gap. One of the things that we do early on is we figure out, we go and map our markets. We only do financial services. We map our markets, figure out which company has a gap where, and then we focus our attention to going and finding companies that we can invest in, that fills that gap, grow that company up in the 4 or 5 years to the right size, and go back to the same people. And we talk to those people in the beginning. Yeah. We have relationships. We actually talk to those people in the beginning. We get that input in. We actually figure out. So if you are a MasterCard or a Visa or somebody like that, you go and talk to the management. You say, so where do you have a gap? Where can we help you as a firm? Where can we work with you? And that's where, and then they come back and they buy it. And that's where you get the good liquidity. Our liquidity on our first 2 funds is top 5 in the world, right? Top 5% in the world. Since inception. So that's a very important thing. People look for that liquidity.
And when you're talking about that fintech focus, we've been talking earlier about the crypto bill passing and Jamie Dimon talking about the threat from fintech to traditional banking. How big of a threat is that when it seems to be going mainstream?
So I think it's a huge threat. I think people absolutely underestimate just how meaningful and just how transformative Web 3.0 and the whole crypto world is going to be. So you've seen the US administration has done a fantastic job around stablecoin, right? So they've come in, they've created the stablecoin legislation, it's gone through. We're now seeing things like Tether and Circle USD. The volumes are massive. In fact, if you combine them, they're more than Visa and MasterCard combined. So this is really becoming a thing. And some of our companies that are in the money transfer space are now starting to replace the way they move money across the world from the traditional rails, which is SWIFT and all the other things, to essentially stablecoin. So stablecoin is actually becoming a really, really important part of the financial infrastructure. Now, let me put it into context, because it's quite interesting. I was talking to the treasurer of one of the largest companies in the world a few weeks ago, and we were having a little conversation. I said, so tell me a little bit about your stablecoin strategy. And he was like, expecting him largely to say, we do nothing in stablecoin. And he turns around to me and says, well, that's interesting you asked me the question. We are now experimenting with stablecoin. I said, what do you mean? I said, we have operations in 180 countries around the world. We need to move money all these places, right? So if you're running a big industrial conglomerate, you need to have cash in one particular country or cash in another another particular country, and you need to do that pretty. And one of the problems with the regular banking sector is 9 to 5, right, or whatever the banking hours in a particular country.
Right.
So if he needs to move money out of hours, it's very, very difficult. And if he needs to do what's called a cash sweep, where he's picking up all his excess cash and putting it on deposit, he has to do that before the banking hours close. So what he's able to do with stablecoin is run a 24/7 infrastructure. So he's experimenting. Now, that's a bit of a problem for Jamie Dimon and other people, right? Because what happens to their cash management? What happens to how they manage cash? It starts to move away from them into this frictionless world.
But nonetheless, for a lot of people, this is a very scary space. It's an absolute minefield.
Yeah.
How do you pick the winners if you're going to choose who to back in fintech?
So I think, look, picking the winners always up. So one thing is we don't generally go too early. So we focus very much on mid-markets, the companies that are actually generating cash flow, that have proven what we call market fit. So particularly the market fit and the product fit is incredibly important. So by the time we come in, we're starting to see this very interesting trajectory that typically fast growth companies, 20, 25%, even more growth. And by that point, we've seen that they've sort of figured out where they fit into that market niche. The other thing that we focus on is investing in expanding markets, right? So if you think about these markets that are expanding, one of the things is we want to be on the crest of that wave, right? And as long as we're on the crest of that wave, and as long as we are maintaining market share, we will grow. And then obviously if we can increase market share, we grow even faster than the market. So I think that's part of the, what we're trying to do. If you think about areas within financial services, great growth. We talked about crypto. That's interesting. So Web 3.0, Web 3.0 infrastructure, stablecoin, super interesting. Embedded finance, single biggest area of growth in financial services. Today, the world's top 30 banks are worth $3.5 trillion. In 10 years' time, the embedded finance world will be worth $7 trillion. It's double the size of the market, right?
Yeah.
So, and then deepening of the digital economy. Every economy becomes more digital. As every economy becomes more digital, we need digital transactions. So you have people playing that. And finally, democratization of finance.
A snowballing effect, clearly.
Yeah.
Talk to us, finally, if you can, about kind of regional exposure. When it comes to a lot of the private players, there's a big question of maybe that you need scale to perform in this market, and a lot of the biggest American players are operating and deploying their massive piles of cash right here in Europe, feeding on this idea of U.S. exceptionalism being over, and that's something we've seen in the public markets as well. There's another angle to this, which is that perhaps if Europe is not the moment, Asia is. How are you thinking about regional exposure? So
we're actually unique because we're global, and we tend not to do a lot in the United States. And actually, Dow Jones, HEC, have a global private equity ranking. They do it for buyout, growth, and venture. We sit in with the venture. There's never been a non-U.S. firm in the growth rankings until a few weeks ago. We came in for the first time as a non-U.S. firm as number 2, and there are 3 firms now in the top 10 that are non-U.S. firms. This is the first time, and that actually plays to what you're just talking about, right? Which is finally we're starting to see a little bit of this activity outside of the United States, which is actually delivering huge results. By the way, in the venture rankings, almost all of them are non-US firms, right? So this is what's starting to happen. Now, to your point, I think the first wave was into Europe. So we're definitely seeing that first wave into Europe. You yourself on Bloomberg talked about Blackstone coming in, and I think the number was $500 billion that they're going to come into Europe for the next 10 years. This is definitely happening. The big firms are coming in. But the big firms play right at the top of the market, right? So they're doing very large ticket sizes, very large deals. People like us are pretty much in the mid-market. We're pretty unique. We're playing in that space. And I think to play in that mid-market, you need to have 2 things. You need to be a sector specialist. And by the way, in that ranking that I talked about earlier, almost every single firm, in fact, I think every firm is a sector specialist. So either healthcare, tech, financial services. So you need to be a sector specialist. That's the first thing. And you need to understand those markets, right? So I think people who have an established infrastructure in Europe and now, as you say, coming to Asia, I think Asia is a little bit more tricky, right? We haven't really seen that transition so far into Asia. You have some of the big firms like TPG and others that have reasonable infrastructure in Asia, but Asia is still there. I think the place that people, interesting enough, are going after, the large guys, is actually Japan, which is actually a huge surprise, right? I never thought that they would come after Japan, but Japan's been super interesting.
Well, we're going to talk Japan later in the programme, especially with that election coming up. But Udayan Goyal, it's so great to have you around the table this morning. Thanks for starting your day with us. Udayan Goyal, who is co-founder and managing partner over at Apis Partners.